Hey guys, this is Simon with Trade and Perform Coaching, and want to do another video review for today, the 23rd of May. And it was an interesting day, right? And there's actually multiple good trading opportunities, and we were able to take advantage of some of them in the room, right? But more importantly, what we strive to understand is how did the auction behave, and what were the clues that we could have learned from today, so that we could have understood how the market was operating. So before I start that, let's get through the disclaimer. So important disclaimer, friends. A reminder for all traders and investors: the webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the futures and options market. Absolutely do not trade with money you can't afford to lose. The website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this channel. Past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. Okay, let's move forward from there. And okay, so coming into the day, let's go through the checklist of what we had. We started off with a gap to the upside, right? And if we look at the volume profile, which we can do right here really quick, if I can pull it up. Well, maybe we can't. I have it hidden on one of my desktops, but I will find it and we will utilize it. Let's see if it's this right here. That is not it. We will go to Plan B. Let's see if this is it. Wow. It's hard at the end of the day when you don't know. There we go. Okay. So here's the volume profile, right? What do I want to learn from the volume profile is the first question I'm asking. And again, the idea, I think the best way to describe my trading style is volume profile light. I'm trying to ask myself very key questions. Where is the profile distinct? Where do I think the market will speed up or slow down? And what has to happen in order for us to expand range? So I have a series of questions. I have a checklist that I go through in the morning. And okay, I will tell you right now, it's not easy, but it does set up in some really beautiful, profitable trades, right? So coming into the day, the first thing that you'll notice on the day time frame is ever since the, wow, I can't see the dates here because of the recording device. There we go. Ever since the 18th, we have been one-timing to the upside. That means we simply have an inability to trade below the prior day's low. In the video I posted yesterday, you will notice that I said that specifically. If you can't trade below the prior day's low, there really is nothing to be bearish about. Secondly, you will notice that we have a high volume node, very distinct, right? Very distinct high volume node, and it is sitting there at 23.90. Let's see, 92 roughly, okay? And you'll see we came almost right to it. We also, right, in addition, had something called a 23.92 is also the volume point of control from Tuesday, okay? So we're carrying over both the high volume node and the volume point of control. So when we open up, remember, we have two things in mind. First of all, we haven't traded below prior day's low, and that's the first thing that has to happen in order to get a bearish move. So we're not looking bearish, right? Right above here, you can see that we have a high volume node off to the left, right? And that gave us an indication of where we might have potential weakness. In that zone, we had to adjust for it a little bit, but we ended up with a zone from 23.97 to 23.98. Now in the first 5 minutes, when traders are trading, those tend to be the weakest hands trading of the day, right? It's either people trying to grab that gap up and drive the market immediately, or try to catch a rocket ship off to the races, or, right, it's people trying to sell and capture the immediate response down. Either way, it tends not to be institutions that are trading there. These guys are the first in, and they are the weakest hands. They're the quickest to dump. And so what did they do? They immediately come back in, right? And they start moving to the downside. And notice, it's not the open gap. It's not the open gap that holds the market, but it's the volume point of control that holds the market to the tick. Approximately 282 contracts went off. So the next question that we would have is, when we're looking at this day, right, is where do we open? Where's that first 5 minute bar? The high of that 5 minute bar, right, is key to the day to getting the market set up to push higher. So this is very common. We open up, we push down to the prior day's volume point of control. We check up on it. There was clearly no sellers. They had an inability to push below. Not only did they have an inability to push below on this bar, so this is really important that you go through this slowly. They pushed through on this bar and then closed on that test back above the lowest closing bar of this 5 minute series, right? Which told you there was a strong amount of responsive buyers from this 2392 volume point of control. That's important information. It told us two things. First of all, we have filled the gap. We've been unable to push below the prior day's volume point of control, right? Meaning buyers are in absolute control at this point. And then when that bar closed, the bar that tested the volume point of control, it was unable to test underneath the volume point of control, and it closed well back into the range, right? It closed well back into the range on that bar. That's a lot of information. And so I want to go slowly here because I want newer traders to understand what's happened here. They've given you a ton of information. They've told you the sellers that sold into the volume point of control were the weak sellers. There's probably the guys bailing from over here, right? That there was a strong response that pushed it well back into the range on the 5 minute bar, right? And that the next natural challenge for that, right? So we're underneath, at this point, we're underneath Monday's high. We know we have a strong response. And the first thing that we know is that the market can't get weak now unless we get underneath this 2392 and close definitively underneath. And we haven't traded underneath prior day's low, so there's no reason to think bearishly, right? So next we push up, right? And on this push up, we established, you'll notice that there was energy expent, right? You can see sellers came in at Monday's high. What were they trying to do? So what we're trying to assess, this is a competitive sport. We're trying to assess what our opponents are doing. Our opponents attempted to push ES back below 2394.25. We then, so then there's a transition. They pushed below 94.25. They were able to get it closed below, and then we immediately close back above. And look what the market does. It immediately comes right back, and notice where we push to. Very mechanical. Right to the opening tick, 2396.50. And then what do? We rotate back down, right back to backside test of Monday's high, 2394.25. Now, I want everyone to keep a really calm mind at this point, right? And think what's just happened. We opened up. Weak hands bought here, right? They panicked out and sold into the volume point of control, exactly where institutions would want to defend. Volume points of control are where the most amount of volume went off the prior day, or it's a naked volume point of control where a large amount of volume went off and was never tested, right? The other naked volume point of control is sitting up here. In order to get up here, the first thing that had to happen was we had to be able to get above the opening tick, 2369.50. So go through it one more time really slowly because it's a lot of information, and if you can process it slowly, it'll make a big difference in your trading, right? So we opened up, sellers came in immediately. We push down, we get below Monday's low. People get a little bearish. They sell heavily. Finally, they come back to backside test Monday's high. They decide, some trader somewhere decided it wasn't going to hold and we're going to try to break, and they flush it into 2392 volume point of control. The volume point of control had a very strong response there, and they crushed that seller, and they drove them all the way back to close well within the range, right? On the following bar we came back, and then finally we poked our head and we're now back above Monday's high. That's all a lot of really valuable information. And the natural immediate target, there's two. What we're trying to get to is up here to this 23.99, right? That's what the market's trying to do. But it's going to make some stops along the way. So first it pushes back to 23.69.50. You can see this is very mechanical because the robot sold it almost immediately to the tick and rolled the market back down where? To 23.94.25. Notice through here, not one tick below, right? So this is all valuable information. What else is this? If you look at that push, that is a push immediately into the 50-60 retrace, right back to the mid of the day, right at the backside test of Monday's high, and a failure to get a bar to even wick below, much less close below, right? Very nice risk reward from this location. Ron in our room was able to capture that trade, and he made a beautiful trade. He had it targeted perfectly up to 23.99, and my hat's off to him. That was a beautiful trade, right? So follow what happens next. We now come back up and we test back to the opening tick. Notice as we're getting to the opening tick, the bars are getting tighter and tighter and higher lows, all the way through here. We form a wedge. We break that wedge, and notice as soon as this bar, see how they wicked in and they try to hold it below. It's important information. They told you in that 5-minute bar, hey, we're trying to hold it below that opening tick. We then get above the opening tick, and as soon as we get above the opening tick, right, notice we close above, we immediately push into Globex high. Again, very mechanical market because there wasn't a lot of participants. Reject off of Globex high. Where do we come back to test? The backside of the opening tick. Then we drive up. This is both an open gap, a high volume node, which I'm going to show you here on the chart. Again, I call this volume profiling for dummies, actually, right? So as simple as can be. This high volume node should provide resistance and slow the market down. And on top of that, within that high volume node, there's a naked volume point of control in here. And then you'll notice as we're pushing up into this area, look at the decline in the NYSE tick against the high of the day, a clear divergence. Now, this brings up an interesting dichotomy. I know Ron for a fact scaled hard at 23.99 and 23.98 to 23.99. People got greedy here and figured that they were going to try to push over 2400, right? That's where we're pushing up. We ran out of energy. Now, I would have liked to have told you I shorted that, but I did not. And let me tell you why I did not. Because if you go back to February, these areas were constantly getting run over because we had a large amount of OTF money being pounded into the market in what was presumably a Trump tax cut. And all these areas, they were providing pauses, but not reversals. Okay? So the adjustment I made from February to January was, well, we're in the top fifth. I'm just not taking shorts. But it's all right. Even though we did not get filled here at 23.92, it was almost impossible to get filled. 282 contracts went off, right? I knew I was looking for, because now, look, here's 930. This created the IB high. This was a break of the IB high. And so now I'm looking for, and I want to step you exactly through the day just like I did in the room. Here's the 50-60 back, right? And into the 50-60 back, I pointed out. Now, I was a little wishy-washy, and I needed evidence, and I got that evidence. And you'll see here, as we pushed into the low here, right, we get clear 5-minute tick divergence as we push into the low, right? And that gives a rotation from 23.96, which was my entry here on this tick divergence, all the way up to 23.98.25, easily garnering your 2 points. Now, that was it for me, but that wasn't the end of the day, right? You'll now notice that we push all the way back up, and what do we do when we push back up? Notice, for the afternoon session, which starts right, let's just do New York time, 11 a.m., Okay, we now push, let me make sure I have the right data here. We push right up to the high tick of the day here. Let me get this right. Here's the high tick. This is the high tick of the afternoon. Do you see that? After New York lunch, this is the high tick of the afternoon. And notice on that high tick of the afternoon, we are unable to even retest the high or push to the high, right? And next, what do we get? Lo and behold, tick divergence and one tick of the high on the push up, and unable to break the high. We then roll back over, and look where we roll back to. If you look at the volume profile for the day, which I believe I still have up here, let me see if I can grab it. Here we go. Well, I'm having difficulty grabbing it, but I will get it. Here we go. There we are. Okay, so at the time, this 2396 right here, which I believe still ended up holding the HVN 57544, 57822. So this 2396, okay, on that 2396, look where we test back to in the afternoon. So we pushed up. Here's the 2396, right? We pushed right back into that HVN. And if you look when we pushed back into that HVN in the afternoon, you'll notice the tick. Finally, when we push into it, we get these heavy ticks into this 2396 area, right? Series 1, 2, 3. They exhaust the move. They're unable to break the intraday HVN, which, by the way, is now tomorrow's volume point of control, today's volume point of control. And then at the end of the day, because they were unable to break, shorts were squeezed back up to 23.9850 at the end of the day. So, all that being said, I wasn't completely on my game today. We were only able to grab one profitable trade for 2 points, right? And I'm going to have to reconsider whether I want to short and at what size I want to short. But these are all understanding what your opponents are doing, right? The inability to get below the day's high volume node, the acceptance above the high volume node all day, the test of the prior day's volume point of control and the close strongly back into range, right? The come back up and test the open of the 5-minute bar. Getting above that lets you know that we were probably coming up into this 23.98, 23.99. And then the tick divergence, it all kind of unfolds. If you'll focus on the story and what's going on, it all will kind of unfold on you and really open you up to great profit-taking opportunity. And the cool thing about it is, because in the room, it's a mentoring room, we're teaching people how to read this. This isn't, while I am pointing out where there are trades available, this isn't follow me. This is learn how to do it for yourself. Learn how to be a great trader, right? Between the one-on-one coaching, which is then backed up with the mentoring that's done in the room, really provides a huge, huge advantage. So anyways, if you think you could benefit from consistent trading, from stopping being a boom bust trader to a consistent day in, day out, not necessarily profitable every day, but week over week and month over month without significant drawdowns, right? That's the bane of my existence, and I worked very hard to avoid those. If that would be interesting to you and you'd like to learn to trade like a pro, and what I call volume profile light, something that's teachable and quickly learnable so that you can apply it. It's not easy, but it's learnable. Contact me. My email is tradeandperform@gmail.com. My name is Simon. You can send me a message on StockTwits. Love to have people in the room and help people learn how to make money on a consistent basis, trading specifically ES, a little bit of CL thrown in on the side. So I hope that helped today. That was pretty much a blow-by-blow, and we had all that laid out for the members in the room before the market opened, so we knew exactly what targets we were looking for and where we were trying to grab those trades. Anyways, hope you have a wonderful day, and I hope everyone made a great deal of money. Remember, control your P&L, control your losses. It's the most important thing you have going for you, period. Anyways, I will talk to you later, guys. Have a wonderful, wonderful night. I'm off to a talent show with my daughter, and no matter how your day was, remember, it's only money. Protect it, but don't make it more important than it is. It's not worth stressing over. It's a matter of learning the techniques so that you can make money on a consistent basis. Okay, have a good night, guys. We'll see y'all tomorrow. Members charts will be posted shortly.